Hey, what is up guys? Welcome to a brand new YouTube video. I'm going to carry on with the stock market free course. Again, there's a huge playlist, so you guys are more than welcome to follow this playlist from episode 1. And if you are just starting this journey right now, go back to the first episode and then come back to this right at the end. I hope you guys can hit the like button, subscribe and drop a comment below. But let's get right into this video, okay? So I just wanted to start off the seminar by going over some basic trading patterns, right? So you got your stock phases, you got your level 2 data, time on sales, how to manage work and trading, right? A lot of you guys, I know your work, your trading, etc. So it's a bit hard for you to really go into trades and get out of trades. And trading devices to maximize your trading. What do I use? What do I need? What did I use when I started? Etc. Now, let's start off with stock phases, right? So these are the different phase you have. So you have accumulation phase. So if you guys can see this clearly, so let's just make this a bit bigger. So you got this phase here, right? This is a part of WYCOFF's market cycle. I highly recommend you researching about him. He's very well known in the establishment. But you got your accumulation phase, you got your markup phase, you got your distribution phase, and you got your markdown phase, right? So what is the accumulation phase? That's when price is being bought and people are starting to look for entries. Then you get your markup phase, which is the phase where the stock is moving up. Again, it provides potential entries. You get your distribution where that stock is being sold, and markdown where we're entering a bearish trend. Now, I want to move on first with the consolidation phase, right? So with the consolidation phase, what you have here is price will be stuck in a certain range, and it happens a lot after a stock makes a move and it break an area of prior resistance or support, and then it'll test certain areas. So again, this is choppy price action. This is when a play is looking for direction, and again, it happens a lot because of the fact that traders are closing profits. Some traders are still getting into the play thinking it could break out, and other traders are looking for a short position potentially. Now, I don't recommend ever entering within this period. One, because price is very unpredictable and can go either way. Two, because it could also lead to a huge break either way. So if you're long, it could lead a huge dump, and if you're short, it could lead to a huge squeeze to the upside. Again, you will lose money, big money either way. Sometimes even your stop losses can't save you. So I highly recommend staying away from the consolidation phase. Now, talking about WYCOFF's market cycle, right? Just in general, I want to discuss what his way of looking at it was. As we discussed earlier in the first slide, right? He mainly focused on accumulation phase, your markup phase, your distribution phase, and then your markdown phase, right? With him, you always get that spring. And what I mean by the spring is when a play has a false breakout either way before making the leg to the opposite direction. This is also known as a stop loss rate, right? This is very common within the stock market. So what he talks about is how a play will take stops, and then the entries are more valid because now shorts are not able to bring the price down any further. Algos have kind of got out of the stops, so they've targeted the stops on purpose to bring the stock up more, again potentially creating a bigger squeeze to the upside. Now, if you guys are actually listen to this video and this is a test, you guys can message me on Instagram, link below, and you can ask me for the book on WYCOFF accumulation. If I can find it, I will send it to you, because I had access to the book a long time ago. But if you're interested, let me know and message me on Instagram. Okay, Instagram, nowhere else. If you message me anywhere else, I will not respond. So message me on Instagram and I'll get back to you in due time. Now, let's look at the accumulation phase, right? So with the accumulation phase, what does he say all the time? Bullish trading range, stop loss triggers before the move. So let's do some practice. We're going to start with the accumulation phase here, and let's just look. Is there any examples that we could see where the stock has been the stop loss rate, or we're just going to look for potential examples. If we don't find them, it's all good. But yeah, we've got something here. We've got something. So this, right here. This is the range. So this is your range, this is your accumulation phase. So look, price is being accumulated, stop loss rate, accumulated, it failed to break a bigger stop loss rate before a big squeeze to the upside. So this is what they mean by the accumulation phase, right? So price is being accumulated. Again, it was accumulated historically before. It was accumulated here before making that next leg down. So let's just make a highlight of the accumulation phase, markup, distribution, markdown. Okay, so let's just do it. Let's draw a polyline. So let me just get to my chart. So make it a lot easier for you, right? If I just draw it. So this is your accumulation phase. We're getting this, we're getting this, we're getting this. It's going to WYCOFF and it break down a bit, and then we're getting this before it breaks to the upside. So now let's go over the markup phase. Let's just mark this. Let's mark this. Now let's go over the markup phase. So this is your markup there, right? It breaks out, it pulls back. A lot of people will take entries on this pullback, and then bang, gone. Now let's do the distribution phase. And it's happening a lot, you'll see it, right? Price fails to break out. That's a signal to be like, okay, you know what, I might have to exit this play. And a lot of shorts will jump in. And that is your distribution phase. Now let's just mark this, right there and there. There you go. That's your distribution phase. That is an area where sellers are stepping up, so a selling period. And then this is a markdown phase, the opposite of markup. Bang, false. This is where a lot of shorts will start getting in, and straight back here. So these are your different phases in the market, and these are areas where what WYCOFF believes, okay, your accumulation, you get a buy step up, you break, you push through, and then you go through a previous area of distribution, and a price sells off. And it's quite common this. And let's go back to our presentation just to show you guys, help you guys a bit more. So hopefully that gave you a bit more of a visual representation. So let's just go through. So again, that's what I discussed in the accumulation phase. You get your spring down, up. Same with your markup phase, right? It got a slope to the upside, demand overtakes supply, you got a new uptrend being started, and it's good for entries. And then your areas of pullback are your potential entry zones. And then you got your distribution phase, right? Again, failure to make new highs. Price cannot break this level. Again, it's the opposite to accumulation, right? It's selling, and then price action starts to fall down. Your stop loss needs to be under this, right? Just in case price falls down and takes a big dump. So it's very important to consider this. So it's a good way to kind of a good exit strategy. And then your markdown phase, this is followed after the distribution phase. So on opposite, on the contrary to markup, is followed after the accumulation phase. So this is when will this end? Because there's a lot of questions. Okay, well, when will we stop? When will the markdown phase stop? Again, when it goes down to a historical level of a price has been accumulated, this is where it's more likely, i.e. demand zones. This is where demand zones come into play, right? This is where you look at price and how it reacts to historical levels. Now a summary of WYCOFF again. Hopefully this helped you guys. So it helps establish market trend, determine market phases, so areas where you could buy and sell. It's quite easy to understand. According to him, markets work in different waves, so accumulation, markup, distribution, markdown. So like I said, message me if you want to learn more about this on Instagram, and I'm more than happy to get back to you. Now, moving on from that, I want to discuss level 2 and why I don't use this. I don't use level 2. I stopped using this completely. But why did I stop using this, right? Level 2, in my opinion, used to give me too many fake bids, fake buys, fake sells, fake walls. And it's heavily manipulated. I don't want to use anything that's heavily manipulated, so I just focus on pure price action, right? Ever since I stopped using level 2, my trading changed for the better, and it changed for the good. So completely stopped using it. Time and sales is something which, if you want to use something, probably recommend this a lot more. Again, it logs all the trading activities, date and time, direction of the trade, price and size. So this is something I probably recommend slightly more. Do I use this? Nope. I do not use time and sales. I don't use any of that stuff. I just focus on pure price action. Now, managing work and trading, right? I want to discuss this because I don't necessarily work and trade, but I do a lot of university work. I am currently studying my final year master's degree. And how do I manage this, right? How? And it's all about creating a schedule. And I'm going to give you an example. Let's just use a typical example of what times people work, right? So a lot of people will be working from 9 to 5, right? 9 to 5. This is probably the typical hours. So market opens for you guys, what? 9:30. So number one, you could possibly get a good pre-market trades in. So your best times to trade are 7 a.m. up until 9 a.m. Now, if you get lunch breaks, your best time to trade are just after. If it's possible, you can move your lunch break to. If you can make your lunch break a bit, a bit later, probably around 6 p.m. UK time, or I don't know, what's that? So whatever is that, about 12 p.m. for you guys, 1 a.m., 1 p.m. So if you can move your lunch break, that's another best period to trade. But in my opinion, with you guys, pre-market trading or possibly after-hour trading is an option to manage on the side. But yeah, I could understand it's extremely difficult to trade and work. Again, if you're in the UK, it's a lot easier because by the time you finish work, you still got half the market left to go. So you could still trade after lunch. You could trade into after hours, and even the only thing you are missing is pre-market and the opening hour or so. But just with me, the way I manage it is by, again, finding a schedule that works for me. Again, I always have my laptop on the side so I can still chart stuff. And again, using higher time frames to your advantage. Don't get fixated on the 1 minute chart. Now, what are the best trading devices? Guys, all you need is a laptop. Laptop is all you need, and you need a chart. You could chart. I started with only a phone. So if you're very good at charting on your phone, use a phone. That's all you need. Once you become more comfortable, that's all you need. But in order to practice and become a better trader, I do recommend a laptop. Me currently, I have a laptop, monitor, and another side monitor, vertical. So you don't need much, to be honest with you. I'm not gonna lie to you, but obviously right now I've kind of got a couple more just to keep it a bit more fancy. Obviously I work, so this is kind of like my work, my job, trading, making money. So what I do recommend you guys is all you need is a laptop or phone. Don't overcomplicate. An iPad is more than enough as well. An iPad and a little phone. Practice, and nail this down. But yeah, that is it for the video. I hope you guys enjoyed this. Hit that like button, drop a comment, and thank you very much for listening through. I'll catch you guys in the next YouTube video. Peace.